I'm Donna Mahoney. I'm one of the senior private client managers in the tax team. And so I deal with individuals, high net worth individuals, or those that have got complicated tax requirements. So we provide advisory service to them and also compliance. So deal with their day-to-day reporting of their income and gains. Yeah, I thought today that it would be interesting to just pick up a little bit about the reports that have been in the papers about Nadhim Zahawi and the tax case that he's settled a large amount on, £5 million, we understand. We don't know too much about it. It's obviously his private affairs, and it's not a matter that's been through the courts, so not formally reported in detail. But we do know that there was some underpaid tax that he's settled with HMRC. So apparently there were some shares that were sold in YouGov, and he realised some funds from that through a complex, what sounds like a complex structure, through a family trust. But yes, the long and short of it is that there was some underpaid tax. There was a penalty that was settled and agreed with HMRC and some interest. So we understand that the penalty was set at 30%, and that would be 30% of the underpaid taxes. So the first level, the careless error or lack of taking reasonable care, the penalties range from 0% to 30% of the tax. That's outstanding. The next level, deliberate errors, they range from 20% to 70%. And for those who are actually hiding the income or asset source, the penalties can be up to 100% of the unpaid tax. So reasonable care, that will vary from taxpayer to taxpayer. And HMRC would look at the individual circumstances and the complexity of their affairs. So somebody whose affairs are very straightforward, to take reasonable care may mean that they've just got quite a simple bookkeeping system and report their income and gains to HMRC, perhaps themselves direct through HMRC's website. Somebody with more complicated affairs, reasonable care may involve engaging with a tax agent and taking professional advice, and taking those steps to ensure that you did disclose everything correctly and there's no careless errors. Yes, again, HMRC tend to look at behaviour again. So 3 different aspects. First of all, they look at whether the correction of their error has come out through HMRC's inquiry or whether it's something voluntary and declared. So it's that telling HMRC about the error. So if you're in a tax inquiry situation, you're not going to get reduction for that. The next 2 can be managed through the inquiry, in that if you're helping HMRC calculate the tax, they look upon that favourably. And likewise, if you are providing them with all the information so that they can check the figures, that would help. So as I say, behaviour is something that they tend to look on. And yes, I think really what I would say, the way we help our clients is that throughout the management of the inquiry and the communication of HMRC is that we start as early as we can, setting the scenes to point out to HMRC why these errors have occurred, if there are any, tell HMRC and, as I say, provide them with the information that they need, calculate the tax. So, sort of just behaving in that manner that will help reduce those penalties and setting the scene as to what happened when. Yeah, tax inquiries can be expensive, not just in the terms of any tax that comes out of them and the penalties, but also in our fees in dealing with it. Some inquiries can go on for quite some time and can be quite involved depending on what HMRC wishes to look into. So we actually offer a tax investigation service cover. So in the event of an inquiry, the fees that we incur are covered by a third party, and our clients do not need to incur those costs or think about them or worry about them. So definitely something that's useful to have.